Hi, I'm Jason Kish. I'm in the commercial real estate investing space, and today I wanted to do a video on how the war in Iran will impact real estate. When people think of the economic impacts of a conflict anywhere near the Persian Gulf, they immediately think about their gas prices. But it's much, much bigger than that. Pretty much every product is impacted by fuel and energy prices. Let's take corn as an example. You need to first till for a smooth seed bed, then you use a petroleum-based fertilizer, and then you need to use a row crop planter to actually plant the corn. And then guess what you need to do? Add more petroleum-based fertilizer. Then you use an absolutely massive combine harvester, and they are huge, huge machines, powered by diesel, of course. After you harvest it, then you need to transport it to the processing center. Looking at housing items, the really common large pieces that go into housing, they have a really large impact from transportation and processing costs when it comes to rising petroleum as well. So when you think about lumber, the logs are big. After they're cut down, they're transported. Shingles are made of asphalt, which is a petroleum product. Copper wiring, it looks small, but it's made out of a massive amount of copper. Or in mining operations, they use trucks that are so big you wouldn't actually believe how big they are if you didn't see them sitting next to a normal size truck. Concrete, we have a similar situation where it's a lot of mining and transportation. You can start to see how all of these products, even though they seem like they may not be directly tied to petroleum, they are deeply impacted by the price of petroleum. Getting away from housing just a little bit here. Here's a visual from the Colorado Oil and Gas Association that shows the variety of products that are made out of petroleum. Some of them might be a little surprising. So you have eyeglasses, because plastic is mostly derived from petroleum. Credit cards, again, plastic. Skis, plastic. Golf and soccer balls, our favorite thing, our smartphones, those are also impacted by petroleum prices, not just in the energy sense, but there are pieces of the phone that are petroleum products. So as you can see, the Iran war will indirectly affect the cost of just about everything. There aren't too many real estate input costs that won't be impacted if this conflict drags on, whether it's the transportation and creation of the product or the direct use of petroleum to create the products. So this is likely to lead to higher building costs, and that may reduce the amount of new building. This is getting a little bit speculative, but multifamily real estate is my full-time job, so I can't help but think of this. If this crisis inhibits the building of more houses, this could keep renters in apartments for much longer. That could lead to higher than expected unit absorption, and it could strengthen occupancy rates. What could you do about this personally? Periods of high inflation are hardest on wage earners that don't have assets that appreciate or generate cash flow. That's because it's really unlikely that wages keep up with cost inflations during these periods of high inflation. The best action that someone can take is to cut out unnecessary costs from their lifestyle and find a way to invest that into assets that will appreciate with inflation, and more importantly, pay you to own them. This exact oil shock and inflation scenario that I'm talking about played out in the 1970s. So let's take a look at what performed well during that time. First off, we have to talk about gold. It increased almost 20 times in value. In 1970, the value was just $35 an ounce. By the time we were in January of 1980, we were looking at $680 per ounce of gold. That's unbelievable performance, and I can't say that it's necessarily going to happen again this time because that's pretty extreme returns, but you can't ignore the fact that gold could be a good play here. In looking at this chart from the Center of Research and Security Prices, this is a chart from 1973 to 1982, and it's measuring the real returns for different assets from 1973 to 1982. So you'll see the S&P 500, which normally has pretty great returns over time. In a stagflationary period, it did not do well during this time. It was actually negative in real returns, like once you factor in inflation. Same thing for world stocks outside of the US. And the bonds, the long-term bonds got hammered during this time. And then the intermediate term bonds did a little better, and T-bills were a little bit less impacted than certainly the long-term bonds were. But this is the thing that may be a little bit more surprising to you, and that is that small cap stocks were one of the best performers during that time. They are more nimble and they were less debt laden. What you need to remember about the 1970s is the cost of debt went way up through the 1970s. So not having that big debt burden did really allow them to operate more efficiently. And they were also in the position where they could adapt to new price pressures better than those larger companies. Here's another piece that I wanted to bring up because I mentioned real estate again there. So let's look at what happened in the 1970s for real estate. The presence of growing price inflation in the economy made real estate an attractive form of investment during the 1970s. Inflation, which had averaged 2 to 3% during the 1960s, had steadily grown to a rate of 5 to 12% during the decade, levels that had not been experienced during peacetime in nearly a century. Real estate was seen as an inflation-proof investment, in part because land is a finite commodity, and in part because the price of real estate was rising steadily. As you can see further on in this article, the price of houses at the beginning of the 70s was a little over $23,000 a house, and by the time we were in 1980, it was over $64,000 per house. So you can see that the three big ways that people won in the 1970s financially was to have commodities such as gold, small cap stocks, which grew pretty immensely during the 1970s, and unsurprisingly, because of all the input costs that go into it, housing. Those three areas were how you could win then. If we have a situation where this Iran war drags on longer, we may be in a situation where those items could win again in the next decade. There's so much to talk about related to the impacts of the Iran conflict on housing especially, that I'll be releasing a part 2 next week. I sincerely hope that we get this figured out and that I can cancel that video. In the meantime, I'd love for you to leave a comment if you have any questions or thoughts about the video, and please like and subscribe because it helps the channel immensely. Thanks for watching, and I hope to see you on the next one.